Hello and welcome to another talking point where future millionaires gather to learn and grow. Now, each week we delve into a topic relating to investment in property. And this week we're going to take a little bit of a deeper look into tax, and in particular donation tax and how they are taxed. Now, joining me today is someone who is no stranger to numbers and tax. His name is Derrick Williams, and he's an accounting specialist at Destinat Accounting. So Derrick, thank you so much for taking the time to join us today.
Thank you very much, Damien, for having me with you.
Now, we're going to delve straight into the questions, and it's a bit of a topic that nobody really likes to talk about, but it's something that is grossly misunderstood by most South Africans. But I'm sure after this video, the viewers will have a little bit more of an understanding and a bit of knowledge. So on the point of tax, now every year we have to submit our taxes. Now, whether we're salaried employees or business owners and consultants, this is a constant every year. Now, for those who don't have an accountant to assist us, can you just tell us a little bit more about what the mandatory requirements in terms of documents are for your tax submission?
Okay, so with regards to your personal tax, every individual should have the following documents. That would be your IRP5, medical certificates, retirement annuities, IT3B certificate for interest on dividends received, and for example, IT3C certificate as well, which is for the disposal of investments such as banks or financial services. But keep in mind that these documents that you need, the supporting documents that you need, are documents that's already uploaded onto your SARS profile, but you need to keep these supporting documents by hand for in the case where there's an audit on your personal tax submission, so that once there's the audit, then your accountant can have these documents, supporting documents, to be able to upload these documents for SARS to see that everything that we've uploaded and everything that is uploaded is correct, and there is the supporting documents for those documents that are uploaded onto your profile.
Now, Derek, just on the topic of these documents, how long do you need to hold the documents for? So for instance, how far back can SARS go and request documents?
So with that, it usually what happens is once you've submitted your return, SARS will then automatically select you for an audit, or they would say on your return that you've submitted that you're not selected for an audit. Once you've been selected for an audit, then you would need to submit those documents within 21 days from your submission of your return. So yeah, it depends. It can go back, but it usually is only once you've submitted your return for that specific year, then you'd need to upload those documents within 21 days. In cases where you won't usually get cases where it's older than, for instance, you've submitted your 21 financial returns. So it would only be for that year. It wouldn't be for 2020 because that's been already completed.
Okay, fantastic. Now, last week you wrote an article about tax-free donations. Now, could you just give our viewers a little bit more background? For instance, how does a tax-free donation work?
Okay, so each individual receives 100,000 tax-free donation each year. In your personal capacity. So if you've got, for instance, a trust, and you haven't used your tax-free donation in your personal capacity, then you can use your 100,000 tax-free donation within your trust. For instance, within a company, the tax deduction expenses can be claimed by the Section 18A within a company, and it is limited to 10% of the taxable income of the company. But keep in mind, if a company does the Section 18A, they will be audited by SARS, and therefore it's important to make sure that that donation for the company is made to a registered organization in accordance to Section 18A.
Now, Derrick, who are the people that can benefit from a tax-free donation? I know you mentioned businesses and trusts, but can individuals? Is it just for trusts? How would a business do that? Can you just give us a little bit more information there?
Okay, so for example, for instance, an individual, it's only an individual that can get the tax-free donation. So if you're a trustee of a trust, only the trustee of that trust can get a tax-free donation of 100,000. Within a company, it's only the shareholders or the directors of the company that can benefit from the tax-free donation of the 100,000.
Fantastic. Now, just for clarity, can you please give us a couple of examples of what a tax-free donation may entail?
Okay, so a tax-free donation is a donation of an asset. So it can be any form of an asset with the amount less than 100,000 or up to 100,000. Once the amount exceeds that 100,000, for instance, let's say my mom donates me a vehicle in my name, and the vehicle is valued at 99,000 Rand, then that would be seen as a tax-free donation in my name. So then I don't need to do any donation, pay any donation tax on that amount for the vehicle. But for instance, if the vehicle is valued at 120,000, then there's going to be a donation tax on the amount above the 100,000. So then what happens is you're going to pay 20% of the 20,000. Because the vehicle is valued at 120,000, you're going to pay 20% donation tax on the 20,000, and that's how that's going to work. For instance, if an individual or a company does a donation to a non-profit organization, that's going to be where they're going to get a Section 18A certificate, and that amount can exceed the 100,000, because that's not going to be part of your 100,000 tax-free donation that you receive each year.
And Derrick, just for a bit of interest, how does one go about making a tax-free donation?
So like I said, you've got your 100,000 donation each year. For instance, my mom donates the 100,000 Rand vehicle to me, then that's going to be seen as a tax-free donation in an individual, for instance. Within a trust, we record these transactions. It's going to be a book entry in a trust where the amount is under 100,000 or up to 100,000. But if the amount exceeds 100,000, then you're going to need certain documents. For instance, with the 20,000, for instance, it's 120,000, you're going to need documentation to say that you're going to donate the asset to the trust, or for over 120,000. So you're going to need to support documents for that, and then you're going to need to pay donation tax on the 20,000.
And then the last question we have came through from one of our readers by the name of Stephen. Now, Stephen says, if the person or entity to whom they make a donation can provide them with a Section 18A certificate, does the amount donated still count towards the 100,000 Rand limit, or does it matter if they're registered in terms of the Section 18A or not? So I think there's two parts to this question. Firstly, for those who may not be aware, what is a Section 18A certificate? And then secondly, does that donation count towards or against your 100,000 Rand per annum?
Okay, so the Section 18A certificate is going to be issued to the individual or the entity from the organization that is a registered, the company is registered in accordance to Section 18A. So they're going to get a certificate from, for instance, a non-profit organization. if you make a donation to a non-profit organization, then you get your Section 18A certificate. That's not going to form part of your tax-free donation of your 100,000 tax-free donation that you receive each year. That's going to be separate. So that's not going to influence anything on your tax-free donation that the individual receives each year.
Awesome. Derrick, thank you so much for sparing time to educate us today. Now, if you, the viewer, would like to receive our weekly expert opinion in our Times publication, please make sure you register for free to the Wealth Masters Club. The link is in the description below. And if you would like to learn a little bit more about investment through properties and specialized trusts, then you can also register to watch our free weekly training, which is taking place this Saturday. Now, don't forget, the first step to creating wealth is always to take the first step. So, Derrick, thank you so much for the time. We really appreciate it.
Thank you, Damien.
And thank to you for watching, and we'll see you again next week. Bye-bye.